Hello, hello, hello. How we doing, everybody? It's Sunday night. Well, it's already Monday morning in some parts of the world. If you're down under Aussie, New Zealand, and them places. But here in sunny Lagos, Nigeria, it is exactly 11:27. Welcome. I've actually a partner in crime tonight. You hear from him in a second. His name is Samuel-Devante. Those of you in Telegram, you know him obviously by now. But we're gonna just be that. But it'd be good to have some background because I'm so sleepy. I might fall asleep in the class. So like I was joking with him, at least if I fall asleep, he was doing his voice. All right, let's get to the charts. Let's see what's good. All right. Right. So Devante, how you doing? You want to come off mute? Let the good folks of YouTube hear your voice.
Good evening, everybody. Good evening. Forgive my night voice.
Now that's a rich voice. That's I'm making bare millions in the market. They can't be bothered with soft voice.
I'll take that compliment right there. That's my night voice right
Yeah. So
there.
I put
Now,
a description tonight. We're gonna look at some charts together. We're gonna cut up some stuff. Have a chat. We might end up talking about some random stuff. So, Devante, you want to tell everybody a little bit about you for what's the first time on the channel, who you are, how we know each other. Don't give away all the embarrassing secrets, obviously.
that's sweet. Definite, yeah. Thank you. I'll try keep it nice and brief anyway. But thank you very much for having me on the platform. For those listening, I'm SD Samuel-Devante here, London based. Um, I am a portfolio manager and a hedge fund owner myself, and the team behind the scenes of the hedge fund group, as well as also we run a Discord with a team of traders. But I've been trading for a good amount of good time now. Coming near a decade, I'll put it. But with that being said, how have I known yourself? Oh my gosh, where do I start? Reverend Israel is I listen, if you're listening here,
Don't give away all the secrets straight to start. Carry on,
okay.
carry on.
I'll try and keep it modest, right? Just keep watching this gentleman's play what's it called channel, guys, because a lot of source, okay, a lot of what's it called information as well as secrets to the game, right? It's all embedded in this man here. But apart from being, a very integral man with a lot of real character, okay, a real character, both in the ministerial world as well as in the social world. I met Reverend Israel through my partner, who's now my wife, and he's been a mentor, he's been a friend, he's been a pastor at the same time. Yet so he's also a trader. Now, if your pastor's a trader, you better have some serious respect. Okay, if your pastor knows how to run the financial markets as well, you better be seriously in holy reverence on a different level. But all banter aside, highly respect this man here, and his knowledge is second to none, in the world of trading as well. And I'm really honored to be a part and to even work alongside, on the platform. So, sir, thank you very much for inviting me to be here. Yeah.
You were
Thank you. Thank
welcome.
you.
And whatever I paid you to say all those nice things, I'm probably gonna have to double your rate now. So thanks
Damn.
for that.
Hey, I can say some more.
No, no. If you say any more, I won't be able to afford your rate. But good to have you, SE. And like he said,
Thank
we've
you.
interestingly, I had no idea you traded when we first started talking about life and spiritual stuff and everything. And I remember it was about 5 years ago, 4 years ago, you first told me that you traded.
Yeah. Yeah.
Um,
Yeah. Yeah.
and to see how far you've come in that space of time is quite it's quite amazing. Um,
Definitely. Definitely.
and for those who don't know, like he said, he's not just talking. When people say, "Oh, they're a hedge fund portfolio manager and all that kind of stuff," they it's for real. I've seen it. I've observed. I have tested his trading acumen, and it is really high class, which is one of the reasons that I wanted to have him on here as often as I could. And when for those of you who don't know, I used to run a trading academy. I shut it down about 5 years ago because I just got so busy with life. And that's one of the good things about trading. If you do it long enough, well enough, you eventually don't need it. So most people start off trading because they need to trade to survive, or they're looking for a source of income. And when they start getting profitable, they need that source of income. But if you do it well enough, and or if you have other things you do in your life that give you a decent source of income, you get to a point where and that's really the best place to be as a trader, where you're not addicted to it and you're not dependent on your next trade to survive. So you can do it out of love for the game. You can do it out of a desire to get better. And 5 years ago, my sons were moving. No, this was more than 5 years ago, actually. The first break I ever took was about 8 years ago. No, that's the second break I took, actually. The first break I took was in the year 2008 when I blew my £25,000 account in one day trading ETFs. Um, and I've told the story before. I literally would just look at the chart and decide what direction I think it was going to go with no stop loss. I think back and Lord,
Damn.
mm.
Wow.
it was it was
No.
carnage. And yeah, like
Jeez.
literally, I look at the chart and I think that's going up, and I would just enter, and it was one of those full margin entries,
Oh no.
and
Not the
it
full
was
margin.
and like and I would literally like forget about the trade for 3 or 4 days,
Wow.
and then come back. And the worst thing you can ever do, the worst thing that can happen to you as a new trader with horrible habits, is that you win.
Oh yeah. Yeah.
That
Yeah.
is the literal worst thing that can happen to a new trader with horrible trading habits, is that you win your first few trades, because then you think you know what you're doing, and you're just dangerous enough to kill yourself. And so when I did that for a year, and I was just slightly profitable. I was maybe about after about a year of trading, I was probably up about 3%, 4%, and then I lost 25 grand in a day because I had no stop loss. Um,
Yeah. Wow.
and that was my entire life savings plus the money I'd borrowed to start trading. And I had to preach that night. It happened about 2 o'clock in the afternoon. I had to preach about
All
seven
right.
o'clock that night. And I remember lying on the floor of my room or my sitting room for about 3 hours, just thinking, okay, I'm down. And so I walked away from trading for about till about 4 years, 5 years, and then I came back.
Ooh.
Good to see you, Kieran. So I came back, and then I actually figured out what I was doing. So I thought technical analysis, uh, falling wedges, rising wedges, trend lines, EMAs, stochastics, RSIs, crossovers, Bollinger Bands, MACDs, and all that nonsense.
Yeah, you went through the
And
lot.
Yeah, I did. No, I did. No, I did. Let's put it this way: losses and stupid courses I paid for that were not worth the paper they were printed on. I'm probably 35,000 pounds, not dollars, pounds deep in trading.
Wow.
I figured out what I was doing. So there's
Wow.
about the 25,000 on that account, and I think I blew another account for about 2 grand. Um, and then just accounts that I didn't blow, but I was losing on, and then I paid some geezers 3,000, and then five. It just by the time I figured out what I was doing, I was at my wits' end. And this may sound crazy to some of you, and I know not everybody here is a person of faith, but literally the only reason I kept trading was I just felt in my heart that God was telling me, carry on with this. This is integral to your future.
Right.
And then I bumped into Chris Laurie and ICT and finally got a clue what I was doing. And I could now actually read a chart properly and see what was happening. But I had a horrible mentality, horrible, what's the word now? Psychology, um,
Mm.
terrible risk management. I was the kind of guy to turn the trade into an investment. It's called the dynamic stop loss method. I
Shifting
once
it
went from
further.
risking. I just went from risk. I once went from risking 2% on $1,000 account on two trades, 1% each. And by the time those two trades finally hit the final stop loss I gave up on, I was down about $700 across both trades in my stop loss because I just
Jeez.
knew it was going to turn around. I just knew it was going to turn around. And guess what? It turned around the day after I finally lost the trades. And
Yeah, that's painful.
from it was painful, yes. And then from about 2014, 15, 14 was when I really started to get a hang of it. And by the time my first son started primary school in 2000 and he started primary school, that would be 2017, finally become profitable. I was trading other people's money. I was running like a little hedge fund on the side, basically
Mm.
making a living off trading. And the process of getting there had drained me so badly that I was exhausted. Secondly, my son went to a school where, for the first year, the parents were supposed to come stand with their kids in the assembly line, and the assembly
Mm.
line and the school run lined up with London. And then I was a London trader.
Mm.
And so I told myself I'd take a year off, and a year became 3. I came back,
Oh.
then started the academy, did some great stuff with that, started this YouTube channel. I've had several pro traders, well, not several, but I've had a handful of pro traders, about 4 thereabouts, reach out to me over the years and say, one, what you're giving away for free, we're charging for, and secondly, we're using your material to teach. One of them accidentally dropped a comment on the channel, forgetting he was using his public YouTube profile, and then had to
Oh.
delete it a day later. Um, and then again,
Wow.
and then again, COVID, life, ministry, family. I just got burnt out. And I told myself again another year's break, and the year became 5. And so, literally a month ago, first time in 5 years, I opened a chart. And I'm saying all this to say that that process was accelerated by having. So I put together a bunch of guys that I used to mentor trading, found the ones that were still interested, and we created a little community. And SD was great enough to actually join that community, not necessarily because he needs it, but because he wants to be there for me. And in 4 weeks, I actually think I'm a much better trader now than I was even then, and then I wasn't half bad at all. And that's because iron sharpens iron. The worst thing you can do as a trader is be in your own silo and not have anybody else around you. And I don't mean sharing analysis, I mean just sharing the emotional toll that trading can put on you. And so find yourself a community of people you can trust, who are integrous, who cheer for your success, and whose success you can cheer for, and just do the journey together. And so I want him here today because I want to show you an example of that. I don't know if you have anything to say about that, SD, before we carry on.
Gotta say thank you very much, first of all. Actually, you know, humbled, honored, and damn, listening to your story as well. Damn, I can relate. I can relate. But I'll just let yours be the example on air. I think
Yeah.
that's more than enough. Yeah, definitely. But I feel like this is one thing that a lot of people really don't realize. When you're starting this career and the financial venture, that it will break you before it builds you if
Mm-hmm.
you don't
Mm-hmm.
if you don't give
Mm-hmm.
yourself to the learning and to the exposure of things. And yeah, I know I said it the other time jokingly with a full margin because I was that full margin guy,
Yeah, yeah, yeah,
full
yeah,
margin of
yeah.
trade and that. But yeah,
It it's and you can tell them if I'm wrong about this, but or if this is different for you. But it's interesting that the better you get at trading, in essence, the more skillful you become. When you really could go full margin and make a killing, it's like the markets break you before they make you, to the point where
that's right.
you are usually at your least risk, or your most risk averse,
That's it.
when you are at your greatest in terms of competence as a trader. Because
So true.
if you're greedy, and I've said this for years, and it's amazing how many people, including those that I mentor in trading, still do this. If you see a trade as the source of income for your next expenditure, you are already dead in the water. If you come to the market looking for your next rent or your car loan payment or mortgage, you're gone. You know, you need to find a rhythm where the profits become the byproduct, not the focus.
That's right.
Find a
That's
rhythm
so
where
true.
you are focused on faithfully and disciplinedly executing predetermined strategic maneuvers. Um, and I was thinking of this recently because Esty and I were talking about putting together some robots. And one of the things that I was thinking about as we were discussing the possibility of coding some robots to automate trades is, when you code in a robot, you need a logical sequence. It has to be an if this then that process,
That's
I
right.
think is the way you put it, SD. And I thought
Yeah.
about the
Yeah.
fact that that's actually the best way to trade manually.
Hmm.
Is I will do this under these set of conditions, or that under those set of conditions, and if neither of those two sets of conditions are clear, I will do nothing. Let me repeat that. The pathway to becoming a successful trader is to boil it down to, I'm looking for this. If I see it, this is how I will respond. If, on the other hand, this happens, then I will respond that way. And if neither happen, I will do nothing. And it doesn't matter whether or not you actually would have made money or do make money. You need to get to a point where you punish yourself for breaking your rules, you reward yourself for keeping your rules, and let the profits be damned.
That's it.
That's the only way to stay in this game long enough to actually be profitable. Any other method will only last so long before you blow either your account and or your sanity. And hopefully that's what we're going to be able to show you a little bit of today. Uh, both ST and I are going to take a little look at our weeks and see how things went, uh, and what we are looking for this week. By the way, I am historically a pure price action trader. I am in the last 2 weeks learning how to impute volume profile analysis into my trading. Esty is a lot more proficient at that, and it's scary to me how prophetic that be. If you understand price action as well as I do, uh, volumes like the holy grail, because it shows you the actual practical evidence for what your price action is telling you. And we've for over the last week or thereabouts in just bouncing ideas of each other, it's just crazy how we'll come to the exact same conclusion on the trade from two different angles, and our take profits and our stop losses are literally 4 or 5 pips apart from each other, sometimes smack bang on. And so you're looking at my week. On the screen right now is all, and SD can affirm this if I'm lying, because he actually was there when we set up this account. This is all from the last. In fact, this is not just the week. This is from Wednesday, isn't it? If I'm not mistaken,
3 days
right?
on. If actually 2 3 days, yeah, from Wednesday to Friday.
Yeah, from Wednesday
You
to
know.
Friday.
Yeah.
And you can throw bottom two trades because, as he will confirm, this was him showing me how to use TradingView. Oh, by the way, I should add, I'm an MT4 dinosaur. So I was until Wednesday last week.
I was just gonna say it
I
was.
was an MT4. Yeah, I was an MT4 dinosaur, and I almost swore that I was never gonna do TradingView, and really because I just every man, every masculine man, we don't like doing things that we're not good at, and so the fear of tackling an unknown in which I was ignorant, having had years of expertise in another platform. And literally, he was so kind, and in an hour, he just took me through the entire thing. And an hour in, I knew I was hooked. And so the two trades were pretty much me just testing how to open a position. I said, so okay, it's a demo account. So is this how we do it? He said, so basically, throw these two trades out. We opened it just to test it, and I forgot them there till the next day. So basically, this week I took 1, 2, 3, 4, 5, 6, 7, 8, 9 trades. Won 7, lost 2. And at the risk of sounding like I'm making excuses, but he's here, he can affirm because he was involved in this. This one here was gold on Friday. We were up 3%. Those of you in the Telegram can remember when I was like, I'm going to close gold now. And he talked me into holding. I'm going to blame him for this one. But actually, it wasn't his fault, because this is one of the things you need to know when you're bouncing analysis of each other. Make sure that the people you're sharing ideas with are in the same trade as you for the same reasons as you. He was in on gold much earlier than I was. He was in on gold as a medium-term trade. I was in on it as a scalp. But I thought it was worth a shot, just left it on. Obviously, it turned around from about 3.5% and lost. And then this was me testing the strategy to see if I could get some end-of-day trading ideas going for the team. And basically, the trade was right. Entry was late. I think Kieran was the one who joked about the fact that the trader once told him, you want to enter a trade, plan where you want to put your stop loss, then slap yourself and move your entry to where your stop loss would have been.
That was me.
Oh, that was you. That was you.
That was me.
That's
Yeah.
literally what happened. Yeah, that's the trade. But other than that, great week, and it shows that if you are consistent to a set of ideas, you'll be fine. So that's just I'll just SD, you can chip in as I go along as well, because we looked at them together last week. But let's start with NQ Nasdaq futures. So
Sweet.
I usually like to trade on an intra-week basis, meaning I'm in on a Tuesday or thereabout, I'm out on a Thursday or Friday. The last 3 weeks I haven't had time to do it. This week I became a scalper or intraday trader just to be able to get some action. But this is what it looked like when the week began. So Friday, Thursday, Wednesday. So fine. So there we go. And as usual, remember the way I do it anyway is I work with three time frames. I have a levels time frame, a signal time frame, and an execution time frame. The levels time frame is either the monthly, the weekly, or the day. Or if you are micro scalping, you can use the 4 hours as a levels time frame. Anything else other than that, you're gambling. And the job of the levels time frame for me, the way I approach the markets is simply, is price at an area where I'm interested in looking for a trade. That's it. Is price at an area where I am interested in finding a trade. So for instance, on monthly, weekly, daily time frame, the highs and the lows of months, days, and weeks, and especially the swing highs and the swing lows, the fair value gaps, the order blocks, the mitigation blocks, the changes in character and all those things. On my levels time frame, I'm simply checking that price is an area that I expect to see a significant reaction on my signal time frame. So the way I normally trade, my levels time frame is the weekly or daily, and my signal time frame is the 1 hour or the 4 hour. So let me show you this very very quickly and how I made my mind that it was worth looking at NQ last week in the first place. Because the first thing you need to know as a trader is there any sense in being in on this chart? If you can sort that out quickly, then you could save yourself wasting time. And the answer is very simple. We're in charted territory. NASDAQ has never been at this level before.
Nope.
Which by default means that you are at a significant level. If an asset is at a level either high or low, where there's no historical data for, you are by definition at a significant level. Let me say that again. If the chart you're trading is in all-time high or all-time low territory, then you are by definition at a significant level. Right? So that answers the question. Okay, so in essence, that's all I need to know. Secondly is what currently happening is, okay, well, I'll just show you this works fractally on every time frame, every asset. That there would be swing low. Would you all agree? Swing low, taken out by price, and then a swing high follows. That is what the swing high was here. That's what you would call a market structure shift, right? / changing character. Did I get that right, SD? Because the terminology was a lot different from when I did trade 5 years ago. What you guys call market structure shifts now, we call market structure breaks. What you call breaks of structure, we literally just refer to as the continuation of the existing
continuation of pattern. Yeah.
Exactly.
It's funny, actually, people still mix it up right now anyway. Still, people call the break of structure the change of character and still mix the two up now and then anyway, to be quite honest.
You can tell how long they've been in the game by if they make that mistake. So, basically, we're not trend on a weekly basis. Now, that means absolutely nothing if you're a scalper. So, a weekly retracement would last weeks as a scalper. So, but it just tells you, okay, on my signal time frame, and there's triads that go well together. For instance, monthly is level, daily is signal, 1 hour execution is very good. Weekly is level, 4 hour as signal, 15 minutes as execution, very good. Daily is as level, 1 hour signal, 5 minutes as execution, very good. They just line up well with each other. And as you can see, it's going up, and then we have a gap. Now, let me just make sure that this is set to electronic trading hours. Where am I? Am I looking wrongly? SD, help me out.
So if you go, you know where your time is, right, by the time zone. Yeah, just next to it. Yeah, no. Just go below slightly.
Oh,
right.
Okay.
Just next to you, that. Yeah, where you see the BADJ.
Okay.
If you tap on that, so that's set for adjusting. If you just change that to ETH.
How do I do that?
So if you click on the BADJ,
yes, I've clicked on it.
It should give you electronic sessions or regular trading hours.
It's not that. Is it because the market's closed? It's not letting me do that.
It's not. Let me
Yeah.
see. Actually, no. Wait. You are on electronic trading hours anyway. You are.
Okay. I was
Yeah,
just
you are.
going to say I think I am.
You are.
So
Yeah.
just means I can trust the gap I see.
Yeah. Yeah. You are.
Okay. So basically, we went into last week with this price push down, engulfs the upside, and left not just a fair value gap here, but actually left a literal liquidity void there. Now that tells us two things. It tells us there's huge momentum to the upside, so we can expect a cube to potentially go much higher, or at least a little bit higher, over the next few weeks and months. But it also tells us that there is a liquidity void and in price inefficiency that perhaps need to be filled in. And so basically that's it. I'm done with the weekly. Essie, do you want to throw anything else onto this?
Yeah, and that's really, really good. What you've done there already. The only thing I'll add on to that as well is also knowing where the point of control for that weekly time frame is lying,
All right. Yep. Yep.
because it will just literally, once price is looking to come back down, it will just literally be a magnet anyway, for price to
Okay.
just tap into that zone. So if we put the TD fixed VP on, and
Yep.
looking at the weekly in itself, one would realize that you have weekly point of controls, which we are above currently, right?
Okay.
Weekly point of
So
controls, and
those
that's
are
what's, yeah,
these
that's it there.
purple lines. Okay.
Yes.
All right. So in essence, you see what I mean by how I arrived at that purely based off SMC price action. SD obviously is versed in it as well, but purely off just volume profile analysis. If you had no idea about breaks of character, breaks of structure, and changes of character and all those things, you will come to the exact same conclusion. The price seems to push up, but it's probably due to filling some gaps or to come down first. Now, it's taking me 5 minutes to explain it because I'm taking you through it. But see, if I do mine out, this initially 2 minutes start. Just pull up a chart, go through it, right, and come to the conclusion that where the wages, this is all I really need to look at. And this would have happened pretty much at last down because you would have seen this gap. Like this pushed up now as you get there. But you would have seen an immediate gap as of last week and realized it's going here. So now you can go through any chart and I'll actually do that just to see how things are going, but really technically you don't need to, and I'll show you why. Because I have a cheat code that means unless the daily chart is my levels chart, I really don't need to look at it for daily bias. I'll show you why. So we jump straight down 4 hour. Um, 4 hour. And second, I'm just trying to figure out trading you and some other things. So patient. Tomorrow. All right. So now I want to think like last week. So let's actually put this on here. Settings. Is it canvas? The daily name. The names. How do I get that on now? Help me out.
What are we trying to do? The daily.
I'll put the day names. Monday, Tuesday, Wednesday, Thursday, Friday in the chart. How do I do that?
I mean the daily. What's it called? The daily levels.
No, the names, like to put in each day the name for each day on the chart, so we know what Monday, Tuesday, Wednesday, Thursday, Friday.
Oh
I was
right.
playing around and I saw it a few days ago.
Yeah, it's usually at the bottom if I've not taken them off. Let me. So as you're literally scrolling above, or you're hovering above on the screen, if you're hovering on the screen, it would
Yep.
literally mention the names anyway at the bottom.
Well, I took them off, but I'm
Oh,
trying
do you
to
want to
put them back
separate
on.
us on there? Do you mean? Right.
Yes, like I
Okay.
wanted to
So
mark to write Monday, Tuesday, Wednesday. Sorry guys, I'm still
yeah,
figuring out trading views,
let
so
me
bear with me.
get that up again. Let me just check. Is it on canvas? Then there were separators, if I can remember that clearly. Give me a few secs while she do that. Um, I think it's supposed to be in scales and lines. And can you hear me? I think it's frozen or something. I think you're frozen. All right, guys, just bear with. Right, I think it's frozen slightly. We're just getting it sorted out. Okay. Right, can you let me know if you can hear me in the chat, guys, if you wouldn't mind. Just let me know if you can hear my voice in the chat at all. Let me know if you can hear me. Just share a comment in there. Just let me know you can hear me. Can everyone still hear me? Team, do you let me know if you can still hear me at all? Ah, great stuff. Thanks, Kieran. I appreciate it. Right, okay. I think, yeah, it's back now. All right.
All right, I think I'm back. Sorry about that,
Yeah,
guys. I
sweet stuff.
apologize.
Right.
Um, yeah, I promise I didn't fall asleep like I was joking. Yeah, so sorry about that. A bit of a technology failure, but we're back. So anyway, right, so let's get this chart back up on the screen. Thanks for. Did you tell any funny jokes, SD, while I was away to keep the people?
Oh, you know what? I didn't even get there. I just literally realized that it just frozen. I was like, oh, sweet. Okay. Let me know if you can hear me
Okay.
first of all before. Yeah, but that's all right.
All right. So um, we're back. So basically, what I've done now is I've literally just mapped out in. It took me 5 minutes to show it to you, but I could do it literally in 1 minute, 1.5 minutes maximum. So you come down now to your signal time frame, which is for me is the 4 hour. And signal simply means this is the time frame that will tell me when there's a trade to be had. Does that make sense? So the job of the levels time frame is to tell me that price is at a point where something significant is likely to happen, and to give me an idea of where to look for on the chart for the significant move. So first of all, we've identified the gap. We've identified the weekly fair value gap. We've identified, for the volume traders among us, we've identified the weekly point of control. And for those of you who wonder what I mean when I say that I can literally come to the same uh, conclusion as a volume trader by price action, really simply is notice that all the weekly points of control are 4-hour consolidations. Just want to show you this, right? That majority of the weekly, well, not on this particular chart, all of them, as far back as they go, are all 4-hour consolidations. Secondly, Esty, can you see this? Secondly,
Yes, sir.
there are 4-hour consolidations that happen before a liquidity sweep. Because literally what you see as a consolidation on your chart is big pocket institutional level funds and traders deciding that price is at a fair value level, aka point of control, and then using that as a point of control to engineer the market in one direction or the other. But can you see here, 4-hour consolidation, liquidity sweep, change of character to the upside, and then we move. Then we come here again, same thing, liquidity sweep to the upside, then we come down. Then we come here again, consolidation, liquidity sweep to the downside, then up, consolidation, liquidity sweep to the downside, then up. Can you see that? Well, what do you know? Here we have a semi-consolidation, change of character to the upside. Liquidity sweep to the upside, change of character to the downside, market structure shift. What do we have below us? We have a fair value gap on a weekly level.
Yeah, that's okay. I'll just give it a minute for him to come back. Um, but that fair value gap right there at the bottom right there is also where you've got the gap sitting. Since price obviously gapped up, if you can see this. So if you're trading this tomorrow, it's something to really think about and also think about through the course of the week. As in price, as well as having that 4-hour change of character to the downside, right? Price's target now is really to come, take out those liquidities and aim for the downside, right? But I would let Rev Israel literally go through from the point of view of price action quite cleanly from his point of view first, and then I'll layer it, okay, with some institutional volume data as well, because what that does is it just literally makes it quite clear sometimes to the pinpoint where banks are planning to push and edge markets to, you see. And as sweet as the markets may look, you know, to some people it looks really, really, really confusing. It makes life a lot easier when you can see where institutions are actually hiding through, you know, or where institutions are literally hiding and planning to literally reset the stage and come back into the markets, right? So let me just check where Rev Israel is. Just let me know you can still hear me, guys, please, if you wouldn't mind. Can you all still hear me there, guys? Yeah. Yes, sweet stuff. Okay, great stuff. Now let me see if I can bring my screen up
Technology
to
here.
you're back. Great stuff.
Oh,
Sweet
sorry,
stuff.
carry on. Were you saying something?
Yeah, now I was just basically trying to literally put in a little bit from the price action point of view till you took over. Yeah, and
Okay.
then gonna
Carry
go
on, carry
later
on, carry on.
after But yeah, so from the very same levels that Rizzo was just literally pointing out, you've got that fair value gap just literally sitting right there at the bottom. Also, if you're looking at it quite cleanly, again off that very same 4 hour setup, you're seeing that as price broke through, from an institutional point of view, if you're trading off the levels where the banks would have literally been, pushing money into the market, right? You'd realize that you see that where that purple line is at the top, where price gave you that change of character, that 4 hour change of character right there. That also, from an institutional point of view, would literally have been from a volume trader's point of view, literally told you that's exactly where 70% of the banks accumulated their positions over the course of the week.
There you go. There you go. And I'm not trying to spoil anybody's business model here, but there is a company that I subscribed to for about a year, 5 years ago, and they were useful at the time. They took about $150 of my money every month, and all I was paying for was for software to show me, because I couldn't be bothered to be I was too lazy, and if you're making more than that in the market, it's fine, to basically do exactly what this volume analysis profile is doing now, which is to show me what I call move origins, which is price always moves from consolidation to consolidation. When you open your chart on any time frame, if you're going to be a good technical trader, ask yourself, where is the last consolidation on this time frame? Where's the last time where price was bound in a tight range, right, before it expanded in one direction? Because it literally moves from consolidation to consolidation. And like you're seeing here, what we call consolidations are literally points of control. That's it. It's the market showing you that somebody with deep pockets decided to step out or step in. And you see contraction. I call it my phrase is CMERT. Contraction, manipulation, expansion, retracement, trend. But these weekly points of control are basically, you're seeing uh, literally where institutional money is in entering and exiting the market. And these are the areas at which you should start licking your chops looking for a trade. And so there's one here. There's only two things price can do at any point in time. It can go up, it can go down. Right? So if it's going to go up, it's going to go up by a change of structure, or change of character, sorry, and a market structure shift. It means a high is going to be taken out, right? And then you expect to see, starting this week, a push up above it, right? Maybe even this one taken out. What am I doing? So, okay, a push up above it. No, I'm trying to use, sorry guys, I'm still working out trading view. Okay, so this is what I'm looking for. So a push up above it, coming back down and respecting, finding support somewhere there. And I want you to get used to thinking about this when you trade. No matter how well you think you know what the market's going to do, you're not paid to be Nostradamus. You're not paid to be a prophet in trading, right? You're paid to be an analyst. Your job is not to try and predict. Your job is to make educated guesses about what's likely to happen and have a plan for what happens when it does happen. So it could actually be this level here. Either of these two would expect to see a market structure shift and then price go. Now, there is and price, remember, price always moves from liquidity to liquidity. I think of trading as a train with stops, or a bus route with stops. And the stops are what I call liquidity pools or liquidity profiles. So I always ask myself, where was the last liquidity profile? Where last were significant orders coming into the market or could be engineered? And where's the next place? Well, an old high is one of the most powerful liquidity profiles out there. So that could be true. However, if you understand SMC trading, we talk about the fact that price likes to move from external to internal liquidity or vice versa. In essence, price has gone from here, it's taken out a low here or here, right? Picked up some liquidity on the 4-hour chart and pushed all the way up. This here is external range liquidity. It's pushed up. We would expect it to come back into the range. And by the range, I mean this is the range here. From this low here on a 4-hour chart, right? From this low there to that high there is a range. We would expect price to come back and pick up internal range liquidity. There's a small low there, that's one, but there's a huge liquidity void here and a weekly fair value gap down there. So I think Samuel-Devante would agree with me. Am I right about that, SD?
Yes, sir.
I am
Yes,
of the
sir.
opinion that the more likely, emphasis on likely, I don't care. And by the way, you don't get any points for being right in trading. You get points for executing your hypothesis.
Yep.
So
Yes,
there's no profit for being correct. That this is a more likely option. And then a push down. Now where first level to me would be closing this gap, right? But beyond closing the gap, I would not be surprised if it came at least back. There's a fair value gap there. And you know, I talk about what I call the handle points, right? The last high or low that sponsor the change of character. What have I done here? Okay, the last high or low that sponsor the change of character. Let's get rid of this range. And so that would be here. This high here was the point at which price changed character and pushed up into this level. And I showed those of you this last week who were with me on one of my analysis sessions that if you go to any time frame on any chart on any asset pair, you will see that pattern over and over and over and over again. And I'll show it to you in a lower time frame. When this happens, more than half the time, price likes to come back into this level. And it's pretty much just below 50% on this fair value gap on the weekly. It's just below this liquidity void. I think there's plenty of opportunity for this to happen. It doesn't have to. The question then becomes, if it does happen, what are we going to do about it? SD, do you want to say anything else before we move on?
Yeah, so that's really really on point. Now, to even add a little bit more to the manipulation, because I'm with the idea of where you mentioned the joke and everybody was listening about when you're planning on a trade and you say, okay, good, 0 to 100, I'm gonna place my trade at 30. Grab a big rock and hit yourself in the head, literally, and just drop back down to where you would have literally put your stop loss and put your trade in there. Right.
Exactly.
Just throw in the volume analysis on this. What you would see actually is if you were to literally go into the 4-hour. So you know how you've got the trades trajectories to come back down, retrace another 50-60% or so, and then go down to close the gap. But for that to be right, it's quite very, very, very intricately drawn out, and you get to see where last Friday's point of control was, as well as also the weekly POC is all sort of lined up. So even if you was to go, say for example, onto a 4-hour time frame, and then you literally checked where the POC was from Friday. Because for those who trade, break, retest, and continuation patterns as well, you
Mm-hmm.
would really understand this very, very easily. You'd see that the point of control on the 4 hour is sitting at just around the 173, right? And if you understand your SMC concepts, okay, the fact that price obviously was breaking down, we've got to change the character to the downside. But then we didn't push through, and then we closed with a wick candle closure.
Hello?
Basically, can you hear me? I'm still here.
Hello? Oh, I lost you for a second. Carry on.
Nah, that's all right. Yeah, the fact that price actually closed with a wick candle closure tells me that
Mm-hmm.
sellers
Mm-hmm.
did not have the full momentum to get the job done,
No. No.
right? Which basically means every single time you get that wick closure down there, whether it's on a higher time frame or if you're scalping on a lower time frame, they go back up to retest our order block where they've come from.
Mm-hmm.
Right now, with
Mm-hmm.
that being said, using the volume profile will show you precisely where the 4 hour volume is hiding, which is on the 26171. So this move here, and the guys on Discord will literally vouch. I literally sent them a video earlier on, but this move here is looking as if the manipulation is going back up at least to that
Mm-hmm.
172 level, and we're gonna manipulate from there and then dump. You know, that's where this
So basically,
precisely
this
comes. Yeah,
this red line here is what you're talking about,
there,
right?
yes,
Which is the point
sir.
of control from yesterday, from
From
Friday.
yeah, from Friday,
Okay, so
and the fact
I'll
that
just
we've not.
put that up on the screen. I'll just put that up on the screen. So
That's
basically
right.
here. So in essence, we're saying there's a likelihood, and we'll look at this in a lower time frame. The price is going to come up into this area here,
Come up into that area, yeah.
find some resistance, and then begin the move downwards.
That- Now, if you would drop down into a 1 hour time frame as well, you would realize that the levels that we've marked, right, not just too far from it, and you're using a 1 hour POC, you'd realize that
Mm-hmm.
not too far from it, there's been a 1 hour fair value gap that's been sitting there for a while next to the 1 hour order block.
Yep. Yep. Yep.
That's not been
Yep.
retested for a minute
This one,
since we
right?
started doing all the dump. Yeah. So looking at all of that again, and then also if I'm to look at for where a failed auction actually really played out, and for those who don't know what a failed auction is,
I was just
okay,
going
so
to say,
looking
could
at
you, for those who don't know it, could you just explain that
yeah,
briefly?
so looking at the volume analysis in itself, the black lines, the black line at the bottom and then the black line at the top will literally tell you where your what's it called, volume area low is at the
We're
bottom
high.
and
Yeah.
volume
Volume
area
area
high
high.
is at the top. That's right. And then the red line is the point of control. Now in between these three lines is where 70% of institutions, your hedge funds, your pension funds, your JP Morgans, this is where their activity happened. Now with that sort of mindset, right, this is what you call the real institutional fair value gap in itself.
Mm-hmm.
That's what they deem as a fair value for them to trade at. But
Exactly.
once you start breaking above those levels, so looking at from your 4 hour 215.50, right? Anything above the value high or the value high area, right? You start seeing low volume being placed. Why? Because they don't think that's a fair value to trade at. So if they don't feel like it's a fair value to trade at, those areas are literally very, very, very high probability areas where you start to see your reversals. So you
Mm-hmm.
see that every single candle that goes in there, you end up getting wicked out and then it will come back down into the volume area. So with that said, price coming all the way up into the point of control. Say, for example, I was to catch a contrarian trade, as prices open, we've already gapped up, right? From where
Mm-hmm.
we closed on Friday. Price will look to manipulate and push all the way back up to the area where we've dropped from, being a point of control on the 173, right? Once it
Mm-hmm.
gets there, I'll personally be out of my contrarian trade right there. Allow price to induce itself, get ready and give me the confirmations, then I will jump in the trade back down as you have drawn with the arrows in itself, so that it's so easier to follow where they've left their trail. Bankers are just too greedy. Unfortunately, they're just very, very greedy guys, and I mean, I don't blame them. They set the trend. It's rigged, as we all know, but follow the whale. And the whale has left his order block, his money there, and where he actually he's left a footprint of where he was doing the big dealings. And once we get there, I'll come out of the market and be like, hello, where we going next? Waiting for the inducement. Yeah. So
Well,
that's just to put a little bit more layer onto that as well.
and to take what you just said a step deeper, if you want to become a good trader, if you don't remember anything we teach you, you don't know order blocks, you don't remember change of character, structure shift, volume area high, volume area low, POC, just take this one thing I'm about to say and figure it out, and I guarantee you become successful. Your job as a technical analyst or as a fundamental analyst, but mostly technical, is to look at a chart and deduce what the people in the markets are thinking. That's it. Every single concept you learn in technical analysis is an attempt to distill the thought process of a market participant into a pattern on a chart. And like SD said, and I used to say this years ago in the academy, uh, institutions are like an elephant running through your backyard. They will leave footprints. An elephant can't run through your backyard without leaving footprints. Your job is to follow the footprint. Very simple, right? And so, like he said, if you look at this volume profile from Friday, that's the volume area high, that black line there. That's the volume area low, that black line there. Interestingly, it lines up nicely with the weekly POC, but that's irrelevant for the point I'm trying to make. So 70% of all the trading happens, this is a histogram, between this point and this point. Because we are trading. Simple. It's called a market for a reason. How does any market work? Somebody buys something at a cheap price and sells it for a more expensive price, and they bank a profit. Or they agree to sell it, right, at a more expensive price, and then they go and find someone to buy it from at a cheap price to fulfill the exchange. You see candles moving up and down. Institutions see fair value, premium, and discount. In essence, at any point in time, someone with trillions or billions of money in their pocket is deciding that something is either too cheap or too expensive, or is just the right price. And they do all the fundamental analysis for you. That's why I keep saying you literally can get away without fundamental analysis except for high value news, because what you see on your chart is pricing in the expectation of institutions on what news should do. The only times you see crazy contrarian moves are when they got the figures wrong or they got the fundamental analysis wrong. And so they're deciding price is too expensive, it's too cheap. If they think it's too expensive, it's going to go down. If they think it's too cheap, it's going to go up. If they think it's just priced right, it's going to stay roughly the same. When you look at a chart, ask yourself, what does this chart tell me about what an institutional trader will decide about whether price is too expensive or too cheap? And again, all what SD has said just now, I want to show it to you based on pure price action. Let's take away the volume analysis, right? Remember what I said. Look for consolidation as the origin of a price move, right? I want you to look at NQ for the whole of this past week, especially the last few days. Now, this was Friday, Thursday, Wednesday, Tuesday, Monday, right? On Monday, what did price do? It literally just moved up, right? Let's go to 15-minute chart. You'll see this even clearer. which is my execution chart. So I've got my levels from the weekly. I figured out what I think is going to happen in the 4 hour. I'm now dropping to a 50-minute chart or a 5-minute chart if I'm scalping to pick up the pieces. So let's look at, remember I told you guys that if you're an intra-week trader or an intraday trader or an inter-session trader, start off by imagining the weekly candle, the daily candle, or the session candle. It's going to open. If it's going up, it's 90% going to go down, find a low, come up, find a high, then retrace and close. Same for a week, same for a day, same for a session. Ask yourself, do I think this is an up week or a down week? If it's an up week or an up day or an up session, what is the liquidity below me or volume profile levels below me that I think are going to hold up as support when price opens and goes down? What are the levels higher above me that are going to hold up as resistance, and where will price retrace to? That's it. It really is that simple, right? Now, let's look at this. This was Monday. What happened on Monday? Price just went up. It gapped up, which tells you there is high momentum, and it just went up. What happened on Tuesday? The same thing. It went up. And then on Wednesday, what happens on Wednesday? Just, I need you to think like a bank, right? For a second, or an institutional trader. Can you see that on Wednesday, price went into a consolidation pattern, largely? Somebody type yes in the comment section if you can see that. When you start looking at charts and markets this way, you're ready to start making money. Now, what this means is, unless you already came into the week having analyzed last week correctly, I didn't trade the week before. I didn't trade at all. So I had no idea what to expect in this week coming in. And so I had no business in the markets on Monday and Tuesday. None. Now, SD did, because he was trading every single day the week before. And so he had marked all his levels out. I hadn't. And so all I was doing was waiting for consolidation. Literally, I spent Monday, and that's why we just said, SD, right? That I took all my trades from Wednesday to Friday. Because on Monday and Tuesday, I was waiting for price to go into a range. Let me repeat. I was waiting for price to do what? To go into a range. And I can almost bet, let's check, that the weekly point of control would have been somewhere around here. Am I correct?
Yep.
So that's the weekly point of control. Mm-hmm. The moment we went above it, somebody in a bank somewhere said price is now too expensive. Mm-hmm. And how did they react to the fact that it was now too expensive? It went into a consolidation. Right? Look at this. Consolidation. Yes, there was a wick down. And where did the wick down go to? The point of control.
Straight. Yep.
Went back up. This. Now, if you're an intra-week trader, you want to see an entire day where this happens. If you're a day trader, you want to see an entire session where it happens. And if you're a scalper, you want to see an entire kill zone where it happens. Or the gap between kill zones. Let me repeat. In week trader, you need one whole day, pretty much almost an entire day, at least 12 hours of price just ranging. That's your signal to get your rifle out as a hunter and get ready to shoot. And these are usually Mondays and Fridays, but this week it was a Wednesday. If you're an intraday trader, it will usually be Asia. Sometimes it could be London. And very rarely it will be New York. But you see an entire session and this means orders are accumulating. They're accumulating orders above and beneath, above and beneath. And if you're a scalper, you want to say a good 1 or 2 hours, pretty much a kill zone time frame, where there's a nice range. If you don't see it, you have no clue what you're doing. You may guess right, but you're guessing. Does that make sense? If you don't spot a contraction of price at a key level, at a key time of the day, week, a month, then you are gambling. This here, to me, was the signal that something was coming. And then what do you know the next day? Well, there's a manipulation. So they take out liquidity here. They go back up and take it out there, right? And as you can see, this is what we call expansion. The contraction is now expanding, and then it tips its hand. How does it tip its hand? There is now a significant change of character. Why do I call it significant? Well, one of the ways I define it being significant is that it will fulfill a standard Fibonacci expansion. You see, this here is not clear. This is clear. Price goes up, takes out that low, comes back up to roughly the 61.8, and then drops like a stone. Right? Now, there are ways in which you could have caught this move, and I believe SD did. Right? Samuel-Devante, am I correct that you caught this move down on Thursday?
Yep.
In NQ? Okay.
Yep.
And that was using volume analysis. Great.
Yes, sir.
You could have just sat this out. You literally could have sat this out, right? And come into Friday looking for a killing, which is what I did. That was this trade right here. Let's see if I can get it up again. This one here, the 8% Whopper. This trade right here was based off this. In essence, Thursday showed me that institutions had made up their minds what they wanted to do for the next few days. And all I had to do was do what? Again, wait for a consolidation. Look, it's the same pattern. Look at it here, right? Mm-hmm. It's the exact same pattern. I used to pay I was saying this before I went off the last time. I used to pay £150 a month for software to do this for me. Until I realized that I was wasting money.
You know, the annoyance when you realize.
All that software was doing was finding consolidations in the market for me and telling me this is a fair value consolidation. And look at this, the exact same thing here. Price goes into a contraction, breaks out. Now, remember, we now have a bias. Where's our bias from? From Thursday. Our bias from Thursday is there was a whole day where price ranged, it shut up, broke structure, and dropped. Beautiful. We expect a retracement. What was what I call the handle point? The high or the low that sponsored the change of structure? Well, it will be this one right here. Can you see it? This low there is what shot price up to take out this range, and then price came back down and broke structure here and then here. Well, just draw this line out. What do you know? Oh, Israel, you're a prophet. No, I'm not. I just know how to draw lines on the chart.
That sounds like Umar Sharif's words right there. You know, it's like,
yeah.
You know what? Trading is very hard till you know how to draw the right lines.
Exactly.
Yeah,
and what do you know?
Right.
The day opened with Asia in consolidation, London in consolidation, and then we went up right into that place, and we saw a 15-minute
Change your character right there.
engulfing. Now, I was trading on the 5-minute chart. I didn't need the 50-minute engulfing, but it's there if you want it. Why didn't I need it? Because I was expecting this, right? I was expecting now. I'll show you, so you know I'm telling the truth. Thank God for TradingView. Let's go and actually put the actual trade on the chart, shall we? Okay, execution marks. All right. Can you see that? Can you see that? No, I think I'm on the wrong asset. No, I took this on MNQ. But then if I go to
You know, it's
MNQ, I'm
funny
gonna lose all
as
these
you're
lines.
as you're as you're trying to go back on MNQ even. Whilst I've got the video actually, funny enough, all the guys on
Okay.
Discord. So
All
when you're
right.
watching a video in Discord, you would actually see, right, whilst I was actually doing my analysis for them, because obviously I'd already planned the whole trade out. Whilst I
Yeah.
was doing the analysis, your cell came through.
Okay.
It came Your sell order came through on the page, and I literally saw,
Yeah.
like the red box for the short. It
Yeah.
literally came up on the screen, and I was like, "Oh, damn it! Let me switch over to the other side." But yeah, it's literally right there in the video. I was like, "Oh my
This
gosh,"
was my order,
you know what?
right?
Uh,
That was my stop loss there or thereabouts, right? So that high there. And Esty and I were talking about this, and I eventually chickened out and took 8.5%. But he would tell you that my original take profit was this line right here
yep.
to basically fill in,
Fill in all of that levels right there and take out those liquidities.
right? And I actually got, because I remember it was 10 to 1. I actually got in literally at the first engulfing on the 5-minute chart. Now that was, you could call brave, gutsy, but the point is, I was waiting for it to happen, and that's really how you want to trade. You want to be a sniper. You want to stock price, let it come to you. You form a hypothesis at what it should do at what level, and then when it confirms your hypothesis is correct, you think, then you jump in. Does that make sense? And let's just go to MNQ so you can actually see it for yourself. Okay, there we are. So there's the trade, right? So now look at that there. How sure of something do you have to be? I basically look, that's where I took it. Look at it. It's on the chart there. And then I added to it here. Notice I added to it on another 5-minute engulfing. So I came in here with about 3/4 of my position. I added to it down here. I came out here because I thought to myself, after losing 3.5% on gold and having it retrace on me, if I lose 8.5% on NQ, I will literally find someone to hang. So,
Oh
but
man.
because we spoke about this, and we were sure it was going to get down here, but I just thought, what, just take the money and go. But look at that. Look at that execution. Simply
Yeah,
because
that's
you know how
pretty
to draw
smart.
lines on a chart. That's it. Just right. And as you can see, okay, so this is MNQ, right? It has my lines from that chart. So you will see that the lines I drew today. Okay, so there we go. Look at that, right? So you catch this trade down from here to here. Look at that. This was the one I tried to do end of day trading on. I came in literally once Asia opened. Yeah, it lost. That's fine. I came out here for a small loss. And then literally within an hour of taking that loss, reloaded again. And it's simple. Find a level on a higher time frame that you think is going to move price significantly. Drop down to an intermediate time frame and wait for a signal. And what was the signal? The signal that told me, get ready, a trade's coming. Well, simple. 4-hour chart, price takes out a high and reacts. But like I said, I don't need that because I can see it very clearly on a lower time frame if you know what you're looking for. Right? So that's this here. Remember? I just showed you this on NQ. It's the same thing here. The line's already there. That was the high that was taken out. Price broke structure. Where did it break structure? Here. This was the low that sent it into that raid. Just draw that line out. So that sell that you saw coming up on the screen during the session was simply me knowing that we were back at that line. It was the same trade from yesterday, from the day before, but I waited for it to show its hand. You don't have to come back up, and what would you know? At the exact same point, we have the exact same reaction. And if you wanted to wait for a 15-minute engulfing, I'm not mad at you. This would have been your entry. That would have been your stop loss. You would still have come away with a cool 5 to 1 hour to hour. And I don't know anybody who goes broke regularly banking 5% or 5 hour to hour.
Even off a 1 to 2 hour, no, right there.
Well,
On a regular, yeah, I can never do go broke on that.
now I'm going to hand over to SD after what I'm about to show you for a while, um, to show that the same principle works on a scalp, right? Um, Gold, that trade was a scalp. Let's find it. XAUSD. Did I do a under or let me see. 1 second. Let's go look at the history. So it was okay. Oh, and that's fine. I thought so. So let's put in gold. So that was the trade. This one here. And again, you can see my lines, right? These lines are all the same stuff as what I just shown you. Um, they're from higher time frames, but I'll just try and explain them here. So basically, on the 15-minute chart, it's easy to see. Price takes out a low. Now, this is a 4-hour. This is a 4-hour zone here. But for the sake of time, I'm not going to show you how I arrived at it. But here, price takes out a low, right? Changes character to the upside. Look at that there. Just draw that line out, right? And what happens when price comes back to it? It takes off. Well, the exact same principle I've just shown you was what I applied on a scalp. Now, the long term, it was a contrarian scalp, which is why I should have, well, contrarian for the day, because long term, gold is bullish, right? As you can see. Yep. Long term, and again, you don't even need volume to show you this, just from price action, right? The last major shift here, if you go to a 4-hour chart, So, uh, come on, Trading View, don't let me down. All right, there we go. So, this is it. It's just basic price action, right? Low taken out here, price pushes up past it. That then becomes what I call the handle point. Remember I said the higher the low that sponsors the change of character, and price came all the way back down and literally touched it. And what did it do? It bounced. It could come back down to this level, but eventually gold is bullish. Anyway, so the same principle works for a scalp. Exact same principle, right? Now, I did it on with NQ as a weekly trade. In essence, I found a day that was a consolidation, right? A market structure shift, a confirmation, a snipe entry. Please, ladies and gentlemen, I want you to see the exact same principle at work here. So this was the trade. Here, this was the 3%, which I was like, I should get out here, and I dilly-dally, that's fine. Now, also, there was another trade down here, and Esther, you remember that we actually analyzed it to come all the way back up to 406. It came
Yep.
to 409.
Yep.
I just thought to myself, the week's over, just cut it for like a small gain. But it did reach target, as you can see.
Literally.
Now, yes, now just look at the exact same principle at work here. Are you ready? Ask yourself, where was the last consolidation? Where was it? Well, the night before, there's a consolidation here. Now, this is on the 5-minute chart, where the signals are supposed to be less trustable, right? What happens? Price goes up, comes down, right? So it comes from here, comes down. Back to where? Another consolidation. 1 second. Here. It's literally price is moving from consolidation to consolidation. When you can see it on your chart, you're ready to make money. Until you can see it, don't trade live. That's my advice. Okay. So, we came in here, same thing. We came back in here, same thing. Low taken, look at that, right? Low taken, breaker structure to the upside, come back down into another block. What happens? Boom. Come back down into that area. Again, sweep over low, break to the upside, price retraces. What next? Boom. The problem is, where was the last consolidation? Here, right? Can you see a consolidation down here? No. Can you see one here? No. Can you see one here? No. Where was the last obvious consolidation on this chart? Up here, right? Would you agree, everybody? Say yes in the comment section or no if you disagree. Esty, would you agree that's the last consolidation there?
Yep. Yep.
So the manipulation and expansion that happens off that consolidation is what we are going to trade based off until we see the next one. In essence, everything else is noise except for this price move right here. This is the move from here to here. Why? Because it's the move that was sponsored by a consolidation and a manipulation. This is the dominant move until otherwise. Everything else is a retracement, which is why I said I was going to get out here, SD. Because I saw that we were smack bang at the 78 level with a significant reaction, right? And what do you know? That's exactly how the day played out. Consolidation, manipulation, expansion, retracement. Now, were there contrarian trades? Yes. Can you take them? Yes. But you need to know long term where you are on that time frame. And here, this is obviously a shortened day from the mindset of whoever's controlling the 5 minute chart. Because that is the last significant consolidation. There's a manipulation of it, right? An expansion. Everything else is a retracement. Notice that when price is going up, it is pushing slowly and sluggishly. When it's coming down with momentum. Can you see that? The upward moves are labored. The downward moves are with momentum. Upward move, labored. And now you see again, now that it's ready to come down, you see the exact same thing. There is what? A consolidation. This is the market tipping you off. And you can probably see this with volume as well, but it's tipping you off that the people with deep pockets are now ready to move. What happens? Bam. See, it works. And if you look at a monthly chart and a weekly chart, it works for position trades, it works for swing trades, intra-week trades, day trades, scalps, and micro scalps. SD, over to you.
You've literally hit it all on the head, really, from the point of view of what's it called, or the smart money concepts there, as well as price action right there. It's just literally tip top, to be quite honest. The thing is that when we were looking at the same price chart, on gold, we actually arrived at the very same sort of levels in a sense of direction per se, and that was Friday. That was
Yes, that was
Friday's
Friday.
move right there. Yeah.
Yeah.
And it was quite clear to realize that obviously price after taking out Wednesday's POC. So if you would go on to, say, for example, the 4 hour chart, am I on the right asset? Yes, I am. Right. If you go into that, you would realize that as price literally was pushing up on that particular Friday, right, price was just literally moving through Thursday. So off Thursday, actually just running back a little bit more to even Wednesday, and then build up from Wednesday. So you'd see that Wednesday we'd had a drop from a volume point of view. We'd literally dropped away from its volume point of control. Just around that.
1 second. Let me put the volume on.
That's right.
Let's just blow this up so the people can see. All right, carry on.
Yeah, so if you're looking from Wednesday, for example, right, and the way my concept usually works is because if I'm doing positional trading, then I'll look at things a little bit differently from the volume point of view. But if I'm just trading as per the sessions, right, coming into the session in itself and looking at the price action that is literally built up already, it's quite clear to see, looking at Wednesday, that price did a major dumping, right, all the way from the 4,018 levels. Prices dropped, right? Now, with me seeing that on the 4 hour, I know that point of control needs to be contested, number one, and also it needs to be protected by the sellers, right? So I know buyers are going to go and retest that spot right there very, very simply. So through the point of whilst price came all the way down into the volume area lows, you literally went into a failed auction spot as price came down to that 3929. on Wednesday. And then from there, you just literally saw price reverse all the way back up, all the way back through to those 4018 levels on Thursday. And then we wake up on Friday and you're seeing consolidation. Now, it might be a bit of a cheeky one, right? And some traders may understand this, but see, if I see a volume, what's it called, a dumping on a point of control, right? All I need to do is just literally set my targets and set myself an order, especially as we've just dumped so massively from such a spot. Just literally set myself a sell order there for price to go retest the spot and then jump back into the sales all the way back down. Right. So seeing that on Friday, before the trade I was personally in on what's it called, gold, I was already in the buys, the reversal buys, looking at what would happen once we get to the point of control, because I'm either looking for an inducement in that area or I'm looking for sellers to literally take back the market. And they were struggling at that point, and at the end of the day, we literally saw a lot of consolidation, and price obviously came back down, which basically says that the sellers have held the area for now. Let's just put it that way, for now, right?
Now,
But it was just so obvious if you had come into the market, right, on Thursday, knowing that we've just dumped all the way from the top on Wednesday, to know, right, okay, great. Price is at 3,929. I'm talking in CFD pips now, guys, right? So if price is literally sitting at 3,929 and your point of control is sitting at 4,017, if you're doing it in pips, do the maths, that's over 900 pips to the upside, free of charge. Just free money. It's like they've left so many footprints for you to just see that as soon as you got a change of character or some sort of a confirmation to say that, yeah, we're going back up, you know where to target. And it's like, you might be wondering, what am I talking about 900 pips free of charge? But think about it this way, one lot size, right? And even if you are risking just one lot size and say your risk was 1K, that was a 9K move on its own for getting leverage. Just sitting there and just knowing, okay, that's the POC. They've lost control there, but they definitely are going back to retest that POC. You could have just literally been in that trade. Now, I've been modest, really, because it went all the way up into the volume area high, giving you an extra 120 pips on top of that 900 and even further to 4,045, so, I don't know. If you're not on Rev's course here, you need to find the man. That's all I'm gonna say. Look, guys, look. Let me be quite honest. And he's not paid me or anything to say anything here, guys. Yeah, I'm just saying it off my free will. Okay, but just understand one thing. This is the gift that keeps giving, in the sense of just coming to that point where you get to understand how to read what you're seeing on the charts. Number one. And then just putting that super A grade levels on your charts. You can just wake up every single day and be like, honey, I'm going upstairs. That's it. And go print the daily bank and come back and make sure you're looking after your family on a daily basis. Like, I can't explain it. It's so simple, but trading becomes so simple once you understand, and then you can start playing the big boy moves and running the fund and running long-term positional setups and so on and so forth, just off the knowledge of that. It's so simple. I mean, look at NQ that we talked about just off the open, right? Look at where NQ is right now. Anybody who was just looking at it, from a point of view of a lack of understanding, would have said, oh yeah, we're just gonna hit that 15-minute fair value gap and then we're gonna go back down, blah blah blah. Price has just literally ignored it like it's not even there. Price just took out that 15-minute fair value gap on NQ and it's just flying up, and it's just still flying up. So looking at gold now, for example, one thing that one ought to understand, that where's Friday's POC on gold right now? We still have a 4-hour POC sitting at a 4,008, right? We still have a POC sitting at 4,008. Now, mark my words, price is gonna come back up to it today. And
Mm-hmm.
you just need to be patient and sit down and just analyze the charts and wait for your confirmation. Price is definitely gonna come through. Now, why am I saying that? Again, looking at Friday's volume levels, right? We're seeing that price is actually right now in the failed auction area. Okay. Again, if you don't know what failed auction is, guys, it's literally below the volume area
Volume
low
low or
or
above the
above
volume area
the
high.
volume area high. There is such a high probability. And if you don't understand, look at the volume nodes, right? All between where you've got your 3978, right? Look at the volume nodes around those sections. It's very minute. Nobody wanted to get involved at that point on Friday. And this is where you can literally sit back, sip on a nice cold brew or something, and just literally get ready for a reversal trade, in the markets and just literally bank. And once that you get that change of character right there, it's like basically catching a bottom in the market in itself. And that literally just makes your life a lot easier whilst you're trading, because you're not just going to just take any trade and just take any bad trade per se, but you're just in it for where the best moves would actually happen. And you can just literally participate in the market for the biggest lion's share of the profits, really, at the end of the day. And if you trade for people like Topstep and you trade for people like day traders or, all these prop firms, you start getting those emails coming through to say, hey, we like what you're doing. We might just offer you a position with us, blah, blah, blah. You know, yeah, just say no. Take their money, mate. They say no, but yeah, ideally at the end of the day, guys, the point of saying all of this is there's so much more to what you're seeing, and if you can just patiently, like just allow price to come to you. It's like fishing, right? Allowing the price to come to you, it's easier to literally just catch the right fish, And I like how Rev you actually break it down from the consolidation. You just wait till you see the consolidation, and
Mm.
then you mark those levels, and that actually makes life a lot easier because a bunch of traders are literally trying to, I call it hocus pocus trades, trying to force and magically get some sort of a setup on the market. And then they get into it and then they just sweaty palming it all the way through. Like, no, there's no need. You don't need to do any of that. Just let the price come to you guys. It makes life a lot easier. But yeah, my best advice is just learn all of that and then, just cover the meat up or it's basically cover the bones up, should I say, with, some of that volume delta. And one thing as well, if I may show, if you pop onto your screen, sir, you know, if you change the candle charts into
Mm-hmm.
the delta, right? So it's the one next to the line charts, the volume footprint there, right? Now,
You know what?
this,
Let's see. Actually, 1 second. It's gonna fry some brains because it, it hasn't fried my brain, but it's heated it up. So maybe not tonight because then you really give them nightmares. So maybe we should come back to Delta on another day because some of them are gonna be like, what? But it's basically just showing you that you can actually see the difference in who's buying, who's selling, and how much is being bought and sold on a per candle basis. It's freaky. It's and I actually wonder how I went all these years without even having access to any of this and expected to compete with the people who did. But maybe let's just leave that out for tonight. Otherwise, some
leave
people are
that out
gonna
for
really
tonight.
go.
That's all right.
Some people are just gonna break their laptops and quit. So let's not
Yeah.
do that to them. But
Uh,
very quickly, just one one screen for three assets for gold. And don't agree with me because I say so, because that's the whole point of having you on here tonight, is to actually give uh, another opinion, whether or not
yeah.
it agrees with mine. But for gold this week, I'm bullish. Are you?
Yeah.
Yes or no?
Yes, 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 yes. Fully bullish. Fully bullish.
Okay. And just yeah, go on, go on.
I was gonna say fully bullish. Even if price comes down, right, and comes all the way to that 380 or 3900 levels, I am still
Mm-hmm.
very bullish. Yeah.
Yeah.
There's so many confluences, so many macro data as well as also not even to come onto the charts, but seasonality wise, we have entered gold's bullish what's it called trends again, all the way from
Exactly.
now until
From here to
February,
about February.
March.
Yes, February next
Yeah.
year. Yes, we're
So
expecting
definitely.
exactly. And just on a macro level, I mean, on a 4 hour, on 1 hour chart, look, we've made a low, we've done a sweep, we've broken character to the upside, we've come back down. So I would expect something like this. This is my first level. Up here is an equal set of highs, and I can almost guarantee that those are going to go. And this here, if you know, this here is a what I call a handle point for this move here. And so I am almost certain that at some point over the next week or two, we'll get it at least back to 4185, if not all the way up here, which is 4221. So that's
Yeah.
what I'm looking for. It doesn't have to play out, but if it does start to play out, then you can take advantage of all the principles we looked at for entries. Let's go to NQ and then we'll do Euro USD very soon because I got a prayer meeting to lead in 6 hours. All right. So NQ, I'm bearish this week, at least for the first few days of the week, if not the whole week. Do you agree? Yes or no?
Yep. Manipulation to the upside. Go really
Yeah.
induce off the POC and then literally start falling down. So if you catch it, especially in the New York session, that will be the best place to actually catch it. And then literally just position yourself for a swing trade to the downside to come and close the gap. That will be my play for the week. You know, still be catching the sessional plays anyway, but that will be my swing trade for the week.
All right. I would agree with that. So that's pretty much what I'm uh, hoping or expecting to see. I don't if it plays out great. If it doesn't, fine. But that's pretty much what the expectation is. And the final one I wanted to take a look at. We haven't really analyzed this in detail like gold and uh, Nasdaq, but let's just because this was a very I mean Euro USD was printing money last week if you were interested. Literally printing money again, especially Wednesday, Thursday, and Friday. So you see, again, we see a consolidation here, right? So this day pretty much held price in one range. Let me just show you that real quick. Price was pretty much held in a range over 2 days. That is the bus the bus driver telling you get on board. This box here, just to show you that principle, I'm going to draw out the center of that box here, right? That line there. This here is fair value. Can you see that? This is the market telling you this is a fair value price. They want to sell, so price goes above it to an area premium. Look at how belabored it went. Then it dropped sharply, retraced, and dropped again. Can you see that? Well, what would you know? There is a daily, I think this is a fair value gap, if I'm not mistaken, that I drew out on my chart. There's a daily fair value gap just beneath. Yes, look at that. There's a daily fair value gap just beneath, which means you would expect some sort of reversal, right? Well, in addition to that, ladies and gentlemen, would you notice that there was another round of consolidation just here? Can you see that? That tells us that this is now the new definition of a 1 hour chart of fair value. If we are beneath fair value, what do we expect to see happen?
Retest.
So I don't know if you agree with me, and please do not agree with me for the sake of doing so, but I am bullish on Euro USD this week.
Yeah. Again, just a second that both Euro USD and cable, for those of you who trade your GU or pound USD, both of them I've got, bullish sense. Well, that's my play for the week as well. They're all bullish for me, really, going back up to retest those levels. And also another thing, going off technicals as well, on the price action. On the Euro USD, if you're looking at the 9th of October price, there was the double bottoms on 9th
Yes,
of October. That's just been
you see the
clean as well.
you see those on the 4 hour chart, and I yes, I think
Yeah,
I mentioned them
you
on the
mentioned that earlier
Friday.
as
Of
well.
yeah,
Yeah. And with those being taken out, there's one thing as well, like once you understand how institutions are actually placing their bets, it's like they have a double bottom. And this is something that really blessed me that they understood it, right? As a retail trader, you see double bottoms, you're like, the people who trade patterns, you're like, yeah, double
yep,
bottom, price is about to fly up. Guess what?
yep,
That double bottom, you have become lunch money for institutions later if you don't know how to get out,
yep,
because they'll get you sponsoring that move with them. They'll push price up,
yep,
go and induce at the top, and then they'll come back, take the double bottoms out, go a little bit below, then they'll induce from there, and then they'll push even higher than the last high that they broke out from, which is a very, very simple setup, really. So in a sense, the fact that the double bottoms have been taken, just waiting for price to literally give the indication or the confirmation, and it's a real move to the upside. Not even putting, what's it called, volume on it just yet. But if I was to put the
mm-hmm.
volume profile on top of that as well, one thing you see from a 4 hour point of view, let me just clean up my chart so I can see quite clear. Right. Okay. So looking at it from the point of view, right, you have a 4 hour, what's it called, volume profile point of control sitting at 1597, 1.1597, right? 1.1597. So that level will get tested. I know there's a 4 hour fair value gap, but they will manipulate price all the way out there. They will manipulate and push price to whether wicket, into the
So
order block in itself.
that's this one here, right? This one here.
Yeah, yeah. So it's
Okay, that red line right there.
1597 level. Yeah, 1597.
Okay.
They will come to it. And once they do come to it, that's where one will be looking for the inducement, ideally, because once we get that, from current levels, I'm not a big Forex trader, right? So please do bear with me. But 15, what's the price now? 1550. Okay, sorry, I've gone on to
You
futures
know what?
now. Forgive me.
Esther, let me put your screen up on the screen
My
instead of
screen up. Yeah,
mine.
that'll be great. Yeah.
Yeah.
Okay. So let's just look at it this way. I tend to use the futures numbers in itself. Let me blow it up a little bit. Okay, so if you can see my screen, right, off on a 4 hour, what you do see is here is Friday's point of control, right there. Okay, 1597. All right. Now, this is me using futures to get the right levels, right? Because obviously, if you know, the CFDs, guys, the CFDs are literally controlled by each broker. So each broker would have their own levels, and it's not the same, or each broker will have their prices. But then the SEC makes sure that futures have got the right levels all across board. So looking at that, you literally can see that where this line right is, okay, Marry that with SMC concepts. You got a fair value gap here, right? Which obviously is also a part of an order block, which is very, very, very high probability on its own, right? Which means that an inducement can happen from there. Yet, so for price to come through, other traders will think, oh yeah, fair value gap, then let me start coming down. No, they will literally push prices all the way to this. Why? Because this is where 70% of price was accumulated from by all the institutions before they actually push price lower. Even to use what Rev was mentioning as well, consolidation sitting right there. It just marries up so much. And this just helps to literally pinpoint precisely where price is going. All right. And also on top of that, right, moving off of there, if you get this area and you get the manipulation from this area or you get the inducement from this area, you are smiling. Why? Because you can literally jump in and participate in what's called the auction of pushing prices a lot further down. Okay. And it just makes life a lot easier. All right. Because what this would do is you get this move on Monday, for example. Okay. You got this move here. What then would happen is, right, we'll get a new point of control at some point, on Tuesday, which means price will come back down to retest that and push a lot further into these levels here, even into the what's it called, the volume area high, and then try and target further where you've got some of these consolidations, right? But we'll take it one day at a time, see what volume is printed, see how much liquidity has been placed in the market, and then enjoy the feast, really. But ideally, right, I see what's it called, the euro market, or should I say EU, coming highly up. Okay, this week I'm fully bullish on that. Same concept and same what's it called, mindset for 6B for those who trade it on the futures, but that's your British pound futures. Again, it's the same thing for let me move this. This was a play that we were playing around with. Um, what's it called? Same thing for pound USD. I mean, same thing. Well, look at your point of control. Look at your volume area high, right? Price has every right to manipulate to the POC1 and push through to this area and then come and be induced from the field auction levels before it comes back down again. So if you're sitting in this trade right now, 3135, okay, you can literally be riding this all the way up to 3196, which works out a very nice, roughly 60 pips, if I'm correct on that numbers there, right? And also the field auction levels at 3206. It's just baffling how you can literally realize, based on the data of where their footprints, or should I say their levels are at, or where price is actually deemed to be going, you can't miss it, guys. You just can't miss it. And it makes your life a lot easy. It makes your life a lot easy. But yeah, over back to you, sir. You know,
All
you've had
right.
this week. Yeah.
Thank you, SD. I appreciate that. Guys, like I said, I've got a prayer meeting to lead at 6:30 a.m. in the morning. I am falling asleep. So I think I think we're gonna call it a day there. And for those of you, by the way, we got a free Telegram community that we're building. It's free, absolutely free. Everything you see here on the YouTube channel is free. And according to several, well, not several, at least 3 or 4 professional traders that reached out to me over the years, last 5 years, the free stuff on this YouTube channel is far more valuable than many of the paid courses that you will ever find out there. Uh, we do, we are planning a paid offering to go back into a paid offering starting from January next year. It will not affect the free stuff. So the paid offering is extra, but we're not going to take the free stuff away from you, either the stuff on the YouTube channel or the signals, the community, the analysis, the free mentorship on Telegram. This is what you can expect: a course, mentorship, and an inner circle. We will be launching this in January. The price point will be somewhere in the region of about 75 to 80 British pounds per month, whatever that is in your currency. If you want to be in the loop as to when this is going up, ask questions, get involved, but also see how you can take advantage of the free stuff more. We've changed the email address since last week. So it's pluralmarket@israelkeys.uk. We just love to have you as part of our community for free, period. And then whatever else you think we can be of benefit to you as well, we'll be happy to do that. So I'm going to sign you off now. I've got some music for you to listen to on your way out. Have a great night. Have a great week in the markets. As early as London, tomorrow morning, we will be analyzing. I think SD is a London trader. I'm more of a New York guy, but I think I will dabble with London this week and see how it goes. Take care, guys. SD, appreciate your time. Love to your wife.
Thank you very much. Thank you very much.
Take care. Bye-bye.
Bye-bye.
Surround me in your arms, in your sweet embrace. Wrap me in your arms, in your arms. Surround me in your arms, in your sweet embrace. 'Cause I am your baby, your special baby. Surround me in your arms, in your sweet embrace. Surround me in your arms, in your sweet embrace. I am your baby, your personal baby. I can't get enough of your love. I can't get enough of your love. Yeah. I can't get enough of your love. I'll never get enough of your love. You're sweet, 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 sweet. You were mindful of me. Who am I? Who am I that you were mindful of me? You say I'm the apple of your eyes. The thought that fills your heart. Who am I? Who am I? Who am I that you were mindful
So my soul longs after you. You're the one who satisfies me. You're the one who makes me whole.